Hello, young traders. Doing Trouble here from Drfx, Swing Trading Mentoring. Going to be taking a look at a recent trade that was made on the US Japanese yen, which provided us with a small trading gain of 13 pips, much lower than the 70 pips that we were aiming for. And so, just going to be going over the main reasons for this smaller than expected trade, as well as to take a look at some other trading setups that the market could provide for us in the next couple of days. Now, this was a setup on the US Japanese yen daily chart, where based on what we had seen so far, it looked as if the market was going to be forming a consolidation setup, and that the next move would take us back towards the resistance boundary at the 113.17 level. Also supporting this rally was the fact that the market had provided us with this bull crown setup as part of the transition from the downtrend to an uptrend. So the left tip was this area here, the center tip being the U-turn that led to the break of this downtrend line, and the right tip was the formation of this small consolidation setup that would be broken to start this uptrend. So this was a setup. This was why the market had a very strong possibility of actually rallying, and this was the reason why we were going to be looking for a trading opportunity to take advantage of this movement. So when the market provided us with this signal, as you can see here, it was a very strong signal that was breaking out above this pennant setup. The expectation was that the market was going to start a rally, a pretty aggressive rally, given the strength of this breakout signal and the fact that we were breaking out of a consolidation setup, which normally leads to fast and aggressive movements. This was a setup to take advantage of this movement. Entry taking place at the market price at the close of the candle, and the stop loss placed at 111.95, just below the uptrend line on the 4-hour chart. Target was set at 70 pips, which was just below the resistance target of 113.17. And as you can see here, unfortunately, at the end of the 2-day holding period that was set for this trade, the market had barely moved, and this required me to close the trade at the end of this 2-day holding period for just 13 pips. Now, the reason why the market had stalled had to do with the fact that we were approaching the breakout equivalent target of this pennant setup. This was actually overlooked. I actually forgot to identify this breakout equivalent target, and so this was an oversight on my part. So had I identified this, I probably wouldn't have traded it, because the distance between where the market closed this bull candle and the breakout equivalent target of 112.60, that would have provided just a trading gain of 30 pips, which in my mind is not really worth the risk when we're holding trades for 2 days. Maybe for a short trading gain within 24 hours, but to be holding the trade for just 30 pips would not have been worth the effort. So this is why the market slowed down, because usually when the market reaches this breakout target, when it comes to breakouts from consolidation, it usually begins to slow down ahead of starting a reversal as a result of hitting this area here. Now, the breakout equivalent target is an area that I identified that the market heads towards when it's breaking out of small consolidation setups like these. So basically what happens is that the market will break out towards an area that is equivalent to the width of the consolidation that is being broken. So we identify the width of the consolidation and then apply that to the breakout direction to get the breakout equivalent of the consolidation setup. So this is how we would have measured this target for the consolidation here. And as you can see, the market is now actually starting to pull back and respond to actually hitting this breakout equivalent target, which in this case is at the 112.60 level. So it actually overshot it a little bit, but I would not have actually bargained on that, because it actually went up to as high as 112.80. So that would have provided a trading gain of 50 pips. Still would have been too small in terms of trying to capture, in terms of the risk involved in holding trades for 2 days. So you can clearly see that the market is in fact responding to this breakout equivalent target, and in most cases it will start to pull back and reverse temporarily before moving on to the resistance target. So this was the original target here at the resistance boundary at 113.17, and because of the fact that we're at the breakout equivalent, the market is now pulling back and is slowing down, and that is why it has not yet hit the resistance target. So in the days ahead, assuming that the market is going to be continuing this movement back to resistance, it may pull back a little bit and then U-turn to continue the movement towards this resistance target. So the fact that that target was overlooked on my part explained why the market slowed down and why we had to close the trade at the end of the 2-day holding period for just 13 pips. Nevertheless, it was still a small trading gain, always better than a trading loss. And in my case, this actually represented a rate of return from this trade of 1.2% on my live account. And just to put this small trade in context, this was a small trade here, and it's actually part of an increasing trend of positive results that are now taking place over the last couple of weeks as I add additional trading opportunities and trade setups that will provide us with faster turnover, and depending on your risk on your particular account, that can result in trading gains of between 2% and 4% per trade. So between February and September, which is the period when I've now, February represented the start of the new trading methodology that we're now using, and over this period the market has provided me with a rate of return of 12.3%, following the high of 16% that was reached in June. So this was a slow period that provided small trading losses, but with additional trading opportunities that are now being provided that provide me with larger rate of return per trade, this little rough patch here will long be forgotten as I head towards the trading target of 14% once again, before moving on to the trading target of 30% in the next couple of weeks. So right now, over the last couple of weeks, the rate of return so far for the month of September is now up to 5%. And as you can see here, for the year, it's now 12.3%. But as I said before, with addition of more trading opportunities that provide us with large trading gains per trade, more trading opportunities that provide us with gains of like this, of 70 pips and higher, and in my case, rates of return of 3% to 4% per trade, then it means that these trading targets are now likely to be hit in a much shorter time, with fewer trading opportunities actually required to hit these targets. Now moving on to the US Swiss franc. This, as you can see here, has formed this large pennant setup on the weekly chart, and most recently you can see that the market has started or is almost coming to the end of this bear movement, this downtrend, following the break of this uptrend line and the U-turn that took place at the resistance boundary here. So the market is very close to hitting the support boundary once again. And as you can see here, this recent move started with the formation of a double top setup, a double top signal that started the transition as part of this downtrend. So the market is expected to head towards the support target within the next several weeks. And so we're going to be looking out for trading opportunities to take advantage of this expected movement. Now, taking a closer look, we can see that the market actually provided us with a breakout signal from this consolidation setup, and that the first target to be hit would be the breakout equivalent of this pennant setup at the 0.9520 level. So before the market actually hits the support target here, it is actually expected to hit this first target here before moving on to the support target. Now, a couple of days ago, I'd actually expected that the 4-hour chart could provide us with these types of trading opportunities in terms of these possible signals. And as you can see here, the market did in fact provide us with a signal like this, but unfortunately this was taken out. And so this sharp reversal is likely to lead to another type of signal, another type of bearish signal that would actually lead us towards this trading target here. So this was a failed entry opportunity. This signal did not work out, And so the market is now looking as if it's going to be providing us with another signal that would allow us to take advantage of this bearish trend as it heads towards these two major trading targets over the next couple of days. I don't know, a similar situation on New Zealand Japanese yen in terms of a consolidation setup, but on a much smaller scale. Daily chart, as you can see here, definitely providing us with the types of waves that lead to the formation of consolidation. So we're going to need to provide, the market is going to need to provide us with a bearish signal here that takes us towards this area here, back towards the support boundary. And in so doing, we're going to be looking out for trading opportunities to take advantage of this movement here. Also forming a pennant looks to be the New Zealand US dollar. Similar set of bullish and bearish waves. And so again, we're going to be needing the market to provide us with a strong signal at this area here and take advantage of the expected movement down towards the support boundary. US Canadian dollar, which is a trade that I think should have been the choice instead of the US Japanese yen, because it's a much simpler setup and there wasn't any breakout equivalent target or any other barrier that would have prevented us from reaching our trading target here. So had we entered the market at this bearish signal, we would have been offered a trading gain of up to 100 pips as the market made its way down toward the support target after just 2 days. So this is the type of trading target that justifies holding periods of 2 days, trading targets of at least 70 to 100 pips, or between 70 to 100 pips, as the market forms consolidation setups. So in this case, we're going to be waiting until the daily chart provides us with another signal here that gets things going, and we're going to be looking out for trading opportunities to take advantage of this expected rally. New Zealand US dollar looks to be in the early stages. New Zealand Swiss franc looks to be in the early stages of forming a consolidation setup. So far, the market has actually started this downtrend, but not with a signal that would actually indicate with certainty that we're actually going to be continuing the bearish movement. As you can see here, so far the market has actually provided us with a bullish signal. So this will need to give way to a strong U-turn and a strong bearish signal that would indicate the continuation of this downtrend and provide us with a possible trading opportunity to take advantage of this movement. Also, on the Euro Aussie dollar, a fairly large consolidation setup looks to be forming here. Double tops being formed along with this bearish signal. So we're going to be looking out for a possible trading opportunity as the market forms its consolidation setup over the next several days and weeks. So that's it in terms of the US Japanese yen as well as other currency pairs. It was basically an oversight on my part in terms of not identifying the breakout equivalent for the pennant setup. And so that explained why the market slowed down after 2 days and why it only provided us with a trading gain of 13 pips. Other trading opportunities could provide us with other setups could provide us with a trading opportunity in the days ahead to compensate for this small trading gain on the US Japanese yen. So we're going to be looking out for the market to provide us with strong signals, bullish and bearish, as the other currency pairs look to be forming consolidation setups as well. So as usual, if you have any questions, you can hit that reply button and send me an email. Also, you can send me a message via Twitter, worldwide876, or on Facebook at Drfx Trading. So until next time, traders, take care.